Happy Saturday, everybody. I hope you guys are having a good weekend. New builds are putting massive price pressure on houses here in Nashville. This is very interesting because the economy is very strong here, but there are some pockets of weakness that could be very, very problematic in the future. We're going to talk about why, and I've got a map of where those listings are, where the new builds are putting the most pressure on housing. But first, my name's Ethan Flynn. I'm a CPA. I'm a realtor. We've had 2 closings in July. I've got my 3rd one coming up on Friday. I'm so excited about providing the absolute best data and the most value you can get in Nashville. So if you are thinking about buying, feel free to reach out. We can discuss it. I'm not trying to get anybody to buy, but if you've made that decision, I would love to help you out. So without further ado, let's get into the data. Okay, so first things first, I wanted to tell you guys, prices just aren't going up right now, okay? It's 478. That's really just basically flat, especially as volatile as this year has been. 478, it's basically 5% from peak and has just been bobbing around for almost 90 days now. No real strength. Now, I did say I thought it would get up to 480. I still think it'll probably get 480 as those closings come in from late June. But we haven't seen that yet. It's still just 478, which is interesting. Okay, so when we take a look at the inventory though, look at this, 6,033, guys, a new high. It was about 50 higher than last week. Keep that in mind, 50 higher. The reason that's important is because when we go back to last year, we can see we peaked at 63.66 in November. Could we hit 63.66 again? I actually think we could. I mean, if we do 50 a week for the next 10 weeks, which would put us basically at the end of September, we're going to be 6,600 in active listings. I actually think that's possible. I really do. I think that's possible. Now, I'm not going to forecast that because, this is a very uncertain time, but the fact that we're at 6,033 is just very exciting. When we look at contracts are tanking, guys. 2475, just absolutely tanking. Now, this is really interesting to me because I don't know why they're tanking. I saw it especially in Williamson County. And the reason it stuck out to me in Williamson County is because we saw inventory. Let's go to Williamson County here real quick. 390 to 357. I don't know why that happened, but I double checked these numbers because I kind of didn't believe it. And that's true. I mean, we have 357 under contract right now. I don't know why. I don't know what happened. That's a massive drop in demand. And what does it do? It puts our supply at 3. Okay, 3-month supply. Now we're in January again. Guys, this is starting to be a really good opportunity. Now, I know people out there say, oh, 3-month supply is still so tight. 3-month supply, I mean, we were barely over three-month supply when prices were crashing last year. Okay, so, 3-month supply is enough to start really putting downward pressure if prices are too high. And prices are too high. Builders can build, they can provide incentives, and they can still beat prices for existing homes. So we're going to see some massive problems. So let's take a look at that. So here we have a map of Nashville. You can see 24 appears to be the area of where the builders are just building the most. So you have Pleasant View, you have Madison, you have Laverne and Smyrna, and then you have Murfreesboro, okay? And now here's the thing. These are all areas where new builds are 50% or greater of active listings. And the reason that's a problem is because these new builds are competitively priced. They're building them because they're making money. They can buy down the rate. They can provide incentives and still beat out existing homes. It's going to put massive pressure on the existing home market. Now, what makes this especially difficult and why this is actually going to turn into a pretty sticky situation, especially as we get into the fall, is that these are also areas that are very highly leveraged, meaning a lot of the buyers here don't have the money to put down 10 or 20%. They use FHA loans. There's a high concentration of first-time home buyers and FHA loans in these areas. And those loans are typically, 3.5% down or even 100% financed in some cases. Okay, well, if you're 100% financed and the home value drops, you have lost a lot of money. You're writing a check already before you even start with transaction costs to get out of that house. So if you live in the house for a year and then you realize you have to move, massive downward pressure. Okay, so let's take a look at a zip code. So 37127 is on the south side of Murfreesboro. It's right in this area right here. And I'm going to show you what it looks like from a scatter plot perspective. So if you can see my screen here, this is just a scatter plot of price per square foot on each transaction. And these are the new builds. So you can see going into 22, we had major price appreciation. And then, of course, towards the middle and towards the end of 22, it crashed, right? It was really bad. It went down to $150 a square foot. And we saw a lot of new builds actually sell for $150 a square foot. And then it's been bobbing back up ever since. And now we're at, the base is about 180 a square foot. You can see that along this bottom line right here. Okay, now let's take a look at existing. Now, when I overlay existing, here's what you see. What you should see is that new builds trend just above where most of your existings are. So this right here is kind of what you would expect, right? Where the new builds, the blue line would be, the majority of those would be just above where the existings are. And that's kind of what you see there. But when you get into these price drops, you start seeing new builds fall through the floor and they really start putting pressure. And that's what you've seen ever since the middle of last year. Now we're starting to see inventory explode on the new build side. And that's where you start seeing the price pressure. And so what could end up being this fall, a lot of weakness, even because we've got new builds that are just coming in and they're undercutting. Now, I've had several conversations. I had a conversation with someone in Murfreesboro. I've had a conversation with someone in Franklin. I've had several conversations where people are saying new builds they're better products. They've got warranties and they've got incentives that existing homes just can't compete with. So this is going to be problematic, and it's going to be problematic in a much broader area than just the places I'm showing here. Okay, I'm showing you the places where I think it's going to be most problematic, but I've seen in Lebanon, I've seen this happen. I'm seeing it in Spring Hill and Thompson Station. Okay, I'm seeing it even in Hendersonville. There's certain pockets of this. So you tell me if you're seeing it, right? If you're seeing it, just put a comment in the below and tell me where you're seeing it, what neighborhoods you're seeing it in. So if you're looking in these areas, just be very cautious, okay? Just be very, very cautious. Don't buy in an area that has a lot of new builds. And if you're seeing a lot of incentives, you're seeing those incentives because they're trying to hold the price up, but they have margin. And if they have a lot of margin, eventually prices will go down if they have a lot of margin. That's really bottom line, right? Prices will go down if they have a lot of margin, or their input costs will go up. And I suspect if they have a lot of margin at these prices, we're going to see prices drop from here for new builds. So let me show you one other chart. So this is what it looks like in Rutherford County. Let me show you West Haven real quick. So here, West Haven, it's much more distinct. You can see West Haven was all over the place in the panic of 21, where everybody's just panic buying and nobody knew what was going on. And then here we can see the new builds kind of take the top, right? And then the existing are below. That's more healthy. What was interesting about this chart, though, is you could see the existing kind of falling through the floor while the new builds held their prices. That is a completely different dynamic. And I think it's a different dynamic because the buyer pool is completely different, right? West Haven is a luxury, higher end neighborhood in Franklin, Williamson County, one of the wealthiest counties in Tennessee. Whereas Murfreesboro, you have on the lower end, below the median sales price, and you have highly leveraged buyers, and you have a lot of investors. That's the other problem about Murfreesboro, is you've got massive amounts of rentals, single family rentals there. So all that to say, I think Murfreesboro is a higher risk area right now. We'll see how this develops, especially as we go into the fall, especially as things soften up from that seasonality. It'll be very interesting to see how Murfreesboro plays out, but I would put it as a higher risk area for now. And with that, I hope you guys have a great weekend, and I will see you next Saturday.